Is the Fed back in play? Hi, everyone. Welcome to this extended Real Vision daily briefing. With me today is Paul Hodges, chairman of New Normal Consulting. Hi, Paul. It's great to see you.
Yeah, lovely to be back. Thank you, Maggie.
So, before we jump in, just a reminder to everyone this is the extended daily briefing. So, the back half is exclusively for Real Vision members. So, if you're watching or listening and you are not already a part of our community, get on it. Come join us. You can just scan the QR code or hit a link that Brian will put in the chats. So, Paul, lots of red on the screen. All the major U.S. equities markets were down today. Treasury yields up. It seems like investors were a little spooked by some of the ISM readings. Should they be?
Um, I don't think they should be spooked or surprised by them. I think they should, however, be pretty worried about what's really going on. We've been floating along on a sort of a bubble of euphoria, really, for a while. But in the real world, as you know, Maggie, I come from the chemical industry, and we've said over the years the chemical industry is the best leading indicator for the global economy because we're right at the start of the value chain. We're third biggest industry in the world after energy and agriculture. We've been around a long time, 100, 150 years. And so, yeah, I mean, everything in the viewers' rooms and so on will all have chemicals in them. So we see all these things a long time before, usually 6 to 9 months or so. And I can tell you, I've been in this game, decades rather than years, and I've never seen the industry so bad. We're
Really?
operating, yeah, we're operating in the States at capacity utilization just over two-thirds at 68%. Asia is operating at 68%. The Middle East is operating at 68%. Europe, unsurprisingly, is worse. It's at 57%. So, when people try and tell me, I mean, I was listening to Jim Bullard from St. Louis, formerly St. Louis Fed, who I've got a lot of time for. And he was kind of today on a webinar, and he was trying to taking a victory lap. Oh, we've done all this. We've managed to reduce inflation by 6 points, and we haven't really hit employment and so on. So all these people who are worried about recession and so on. I'm going, Jim, I've never seen operating rates in the world's third largest industry at two-thirds of capacity. If that's not a definition of a coming recession, I've no idea. Is it a recession? Is really, or is it actually something worse? Well, that's the only question to me.
So let me play devil's advocate for a second. Is the nature of growth changing? So do you think the chemical industry is still that canary in the coal mine that it was? Because we have seen a sort of um, bifurcation of sort of service-led growth
Hmm.
and what would be more traditional manufacturing. Is it possible that for some reason where we are now in the cycle, that things are more heavily slated to the service side of the economy?
Well, I found myself recently thinking back to 2006, 2008, when we were, flagging up more and more powerful warnings, all over the place, really. And we kept being told, "Oh, you don't really understand," or something's changed, and you're an old fool. None of you understand it. And of course, in the end, it turns out we did. And the military acronym VUCA came back to me of volatility, uncertainty, complexity, and ambiguity. And just your point there, Maggie, I think is absolutely right. Yes, I mean, we are getting very confusing and contradictory signals, if you like, which you can understand. Okay, everybody bought lots of stuff when they were locked down. They clearly don't need a lot, so therefore, you should expect a lower pace of purchase going on. No problem at all with that. The normal way that would sort of ease off. This has been going on now for 18 months, so you would kind of think it might be coming to an end, but no sign of that. On the other hand, we've all been locked down for for 2 years and so on, and my normal recession signal is I get on a plane and it's half full. Well, I've been on, not hundreds, but I've been on tens of planes. Every single one has been completely full. And, I've been out with friends who said, "Oh, I tried to book this restaurant, but, it was full." So you've got that complexity coming into it, that people after 2 or 3 years of lockdowns want to get out. They want to see their friends and family. They want to see their business colleagues and so on. And and because of uncertainty, actually that becomes more important that you want to. So I think that the fundamentals of the chemical industry are always changing.
Mm.
Things that we were doing 20, 30 years ago, we're not doing today, and the things we'll be doing in 20, 30 years' time. But chemicals themselves are a fundamental part of life. And so, you're always going to have a chemical industry.
Yeah, and I going back to that statement that you made, even the service industry, everything has so
Hmm,
presumably, even if it was shifting, you could see if it was from goods like refrigerators to trips, but the planes need everything has chemicals in it. They are the sort of building blocks. So
exactly.
it would
Yeah.
make sense that, that if we are seeing that reduced capacity, it would be a worrying sign. What are you hearing about why? What are the customers who are the customers that are disappearing? Can anyone
Well,
tell why capacity is so low? Because it would not match up with some other things we're talking about in the US economy that's so resilient, although we are seeing weakness
mm,
abroad. What's
mm,
happening? Does anybody
yeah,
have a read on that?
we can come back to that.
Okay, put a pin on
But
that because Paul's like, "No way, that's not true."
oh, let's take the first question first. I mean, what's happened? What is the fundamental problem that I have? Um, it's that for the last 15 years, since 2008, the Fed, the central banks, have gone for this zero interest rate policy, uh, fabulous liquidity. So you've got a generation of people who actually genuinely think that interest rates are always zero, and there's always liquidity out there. I don't know what the exact number is in the S&P 500 or the Russell 2000 today, but something like 20% of companies have not been making enough money for years now to roll over their to pay out of their earnings to pay their debt. They've just been rolling over debt. Well, that particular party has come to an end, and essentially, so that's people's understanding of the real world has been broken because the central banks have interfered with the key role of markets. You and I have discussed this in the past, which is price discovery.
Mm.
I want to buy an airline ticket from LA to New York. You want to sell me one, and we agree the price. If markets can't do that basic transaction because the Fed keeps piling in money, oh goodness dear, poor Maggie can't sell all their tickets. So let's give it more money and so on. Let's stimulate. What they've been doing, therefore, is they've convinced a lot of companies to invest in capacity far in advance of real demand.
Mm.
So we did some work uh, a little while ago where we looked at what's the basis of interest rates, and if you go back to the Bank of England, you've got a history of 300 years, which is probably reasonable in terms of telling you what happens. And of course, it bounces around. You've got world wars and depressions and all sorts of things. But over that 300 years, the average real interest rate is really pretty steady at inflation plus 2.5%. So, if we assume that we're going to go back to inflation plus 2.5%, that is going to be a tremendous shock to a whole generation of people who think, no, it doesn't matter.
Yeah.
And so you've got false expectations, and that is not only in behavioural, but it's also meant you've put a lot of capacity on the ground. I mean, we'll come to China, I'm sure, later on, but China is the classic example. It's been subprime on steroids with its real estate bubble. These things do catch up with you in the end, and the war, basically, Russia's invasion of Ukraine, has been the catalyst, really, for the change.
So you made a comment when I said the US economy has been resilient. So what do you think about what's happening here with the US economy?
Well, I mean, I've lived and worked in the States. So I have a son who was born there. So I have I feel I have a bit of a sort of of a stake in the country. And what we're seeing is some bits of the economy doing very well, some bits like commercial real estate not doing very well at all. I saw the Wall Street Journal has a thing about doom loop, which seemed quite a surprising headline for the journal, but there you go. We did some work on the US housing market recently, and on the one hand, it looks absolutely fantastic. Builders have been selling out lots of housing starts and so on up at 1.5 million and so on. And in the normal course of events, you just look at the headline, you think, oh yeah, things are going well, it's resilient. But then you look down and you say, well, the majority of people have got mortgage rates at below 4%. If they move, they're going to pay 7% plus. So unless somebody gives them a very good job offer, then they're not going to move. Because that's an average house size, and yet so you've also got, but again, when you dig down into it, if you wanted to buy a new home today, then you'd actually have to have an household income of over $100,000. So because of I think it's $2,700 a month is the average mortgage payment. So you at the one hand, exactly as you say, you look at the new homes being built and so on, 1.5 million, not quite at the 2 million of subprime, but pretty good, really, much better than 700,000 in 2009 or something. That's okay. But then you say, well, why is that? And the answer is, large part of the market either own their home, they're older people, they've paid off the mortgage, or they've got a low price mortgage and can't afford to pay. And the only people who are buying, therefore, are the people who have to move for some reason or another. So I don't think that's a stable position. So that's why I sort of looked askance when you said resilient.
And this is the question that's been so hard to nail down, because people have very differing views on what's happening with the economy. So let's talk a little bit about inflation as well, because I think the trigger from the ISM was, oh, it looks stronger, prices paid were a little higher. And so we had once again come around to the idea that the Fed was definitely on pause in September, and maybe things were moderating. We started to hear those messages coming from Fed officials like, we can afford to wait here. And then you get a hot reading and it gets the bond market nervous again. So you're a little concerned about maybe that the growth underneath is not as strong, or the economy not as strong as maybe some think, in problem spots in housing. What about inflation? What's happening on the inflation front?
Well, I think that inflation, again, we became used, and I kind of understand that. In the 90s, oil and food prices really didn't matter very much. And so if you wanted to get a reasonable reading on what inflation was, CPI or whatever, you tended to say, look, yeah, we know food prices have just jumped up because there was a orange juice harvest or something in Florida was wrecked, or energy prices, there was a Gulf War in 1991 or something, but it was only 3 months or something. So let's cut them out. But if you look today, this is where we come back to the war as being the really critical factor here. What we saw with the war was almost immediately Russian gas being cut off, and that led to 70% of Europe's fertilizer plants being shut down. Now you say, does fertilizer matter very much? Well, half of the world's population depends for its food on nitrogen fertilizer. And those, if you remember Chemistry 101, you go natural gas into methane, into ammonia, and that gives you your nitrogen fertilizer. So 70% of Europe's capacity is shut down. Plus, of course, we got the problems with exports from Ukraine and the sanctions on Russian. Right? So you start to see fertilizer costs moving up. But of course, that doesn't have an immediate effect. It's not that the farmer goes out in the morning and sows his crop and fertilizes it and then brings it to market next day or that evening. It's what wasn't planted or wasn't fertilized last year doesn't come into the market this year, and that's why we're now starting to see food prices looking rather sticky. And of course, what we call over here in Europe sod's law, something else happens that makes that worse. And the something else this time is El Nino. And the World Bank has come out and said, look, rice, for example, and other commodities in El Nino events tend to have problems with growing. India, the largest rice exporter in the world, 20 odd million tons out of 40 million tons or so, has banned exports of all non-basmati rice. It's thinking about banning exports of sugar. Other Asian producers of rice are doing the same. So you're starting to see, yes, it's been a bit quiescent, a bit quiet for the last few months, but you're going to see food prices moving up again. And of course, for the last couple of months, we've seen oil prices moving up, and Brent prices are up 26%. And there are very credible people around who are saying they think oil could get to $100. I used to trade oil in Houston, Texas. I understand their point, because I think that what's happening with OPEC Plus, particularly with Saudi and Russia, isn't an economic debate. It's a political debate. They want to get rid of Biden. They want a Republican candidate. They'd love to have Trump back, but if it can't be Trump, well, they let anyone, because they think that would be the end of the war, and they think they'd have an easier ride. So they're going to push up the price of gasoline in the hope that that encourages Americans to vote against Biden and bring in somebody that they want. That kind of foreign interference in democracy doesn't seem very good to me, but that's where we are. So those two things that the Fed is happily ignoring at the moment. Oh no, we don't need to worry about food prices. We don't need to worry about energy prices. And as I say, I completely understand why historically they've been saying that. I think they're flat out wrong. Those are going to be the key things over the winter. You are going to see higher food prices. You are already seeing higher gasoline prices. And those are the things that impact our daily lives.
Yeah. Do you see that as a short-term phenomenon or shorter-term phenomenon sort of through this winter? Or is this something structurally that's changing, where these supply issues, whether because of the supply chain or just the supply available, changing geopolitics, realigning alliances, becomes more problematic on both food and energy? Is this a sort of, new normal, so to speak?
Well, I think the new normal is another way round, because we were already moving towards renewables and so on. I mean, Texas, for example, home of oil and gas, as I think it's the third largest. If it was a country, it would be the third largest country in terms of renewables capacity. And when they had the big freeze, renewables kept going. It was gas, that natural gas that froze up. So renewables are a good thing, and they're also much cheaper. What we've already been seeing, because of climate change and all the fires everywhere, I mean, even coming down into the tri-state areas, we know all that smoke. What we're seeing has been a move towards renewables, and of course, paradoxically, one of the advantages of the war, there is a silver lining, is that it's encouraged everybody to say, well, no, we do, under no circumstances do we want to be held ransom by Russia and Saudi Arabia again. So we are seeing an expediting of solar and wind and water and so on. So there is a systemic change there, a structural change going on, but it won't. It will take 12 to 18 months to get, depending on where you are. Some countries, are already pretty much 100% renewables, but it's expensive. You're moving towards, in the States, towards phasing out gasoline and diesel cars by 2030 or 2035 and so on. But it takes time, and people have already got a car. They're not going to suddenly throw it away or anything, and nobody would want that to happen. So the process of transition is probably 5 to 10 years. It's not 5 to 10 minutes. We're used to, in the financial world, to the idea that everything happens in milliseconds.
Yeah.
But
We've
in the
been
real
conditioned to
world,
that lately, right?
yeah,
The cycle has been compressed, and we get
yeah.
these big lurches. So you see this, you think that although we are having these short-term pressures from energy and food, that the longer cycle here, the change is more deflationary than inflationary. Is that right?
Oh, very much so. And if you sort of think about where would you want to invest, uh, like all occasions, it's actually, it's a complex decision, unless you're a meme stock follower, in which case you just lose your money and you smile. But in terms of what we're looking at, we're clearly in an inflationary period for the moment, and it's hard to say when that will come to an end. It will come to an end, but the deflationary aspect is there. So as an investor, you've got to be cautious about saying, well, I can see, I can see ahead till Christmas, no problem at all. I suspect the war will be going on for another couple of years or so, in which case we probably will be an inflationary spiral for that period of time. But supposing the war finished in 3 or 6 months' time, now you would be revealed as having an awful lot of capacity which you don't need. And of course, you've got this thing of the aging populations, of which the States is just typical. Like you take the 10 richest countries in the world, 9 of the 10, the biggest growth in population for the next 5 to 10 years, and after that, is in the over 55s, the perennials. And the perennials, like myself, we're lovely people, but the fact is we don't consume very much because we're not having children anymore, and we may be having grandchildren, but that's indirect, if you like. And we already own most of what we need. And once people move into retirement, they have less money as well. So if you take the data from the Bureau of Labour Studies, for example, what you see is that consumption peaks, household consumption peaks at around the age of 55 or so. And then by the age of 75, it's down by about 45%. Now, you know the numbers about the baby boom as well as I do, that we've got, the 18 years from 1946 to 64, we had 52% more babies born than in the previous 18 years. That was the baby boom. Almost all of those babies now have become perennials, and the oldest ones are old perennials. So you're really looking at a very deflationary environment. China is far worse. We'll probably talk about China later on, but because of the one-child policy, China selectively aborted a lot of female babies. So if you look at the numbers, instead of 103, 105 male babies to females, which is the normal ratio around the world, you've got a ratio since 1980 of about 114. So that was because if you're only allowed to have one child, a lot of rural families said, well, it's better be a boy to help me with the farm or whatever. We may not agree with it, but that's what happened. And so you get to a situation now where the numbers show, this is just, these are government numbers, they're not made up by me, over 70 million lost females from 1980 onwards, which means over 70 million of females who can't now have babies themselves. And no surprise, because this starts that you're on an edge now, they're looking, instead of having 15 or 20 million babies a year in China, they're at 9.5 million last year, and they're saying it may be 8 million this year.
Yeah, that's a huge, huge drop off. So we have
Yeah.
these big trends, and we've talked demographics. You and I've talked before. We've talked on the
Mm,
program, which are this longer term deflationary
mm,
trend. If we bring it back a little bit shorter term,
mm.
so surely the Fed sees this, surely the markets are sniffing this out. It's sort of the timing of that long arc of that story is tough. In the short term, couple of questions. If we've got some pressure, some supply pressure in the short term, what does that mean for commodity prices? Do they go higher, or are they capped because they sort of sense some of the economic weakness you're talking about? They sense some of the capacity that may come online. What do you see happening with commodity prices?
I think it comes back to my point about complexity here.
Mm.
There's no easy answers to this. I can be quite confident in saying that food and energy prices are moving up. Cereals are moving up in price, rice is moving up in price, and so on. So you look at all of that because of the war and because of El Nino, and people could investigate that in more detail. We've put some stuff on our website, of course, already if they want to go there. But if you then say, well, let's come back to house building in the States as an example. Now, you might get lured into saying, well, housing starts are at 1.5 million. That should be good for lumber. That should be good for all the things that go into housing. And then you look at the people who supply housing markets, and you see they're all going out of business because people aren't actually moving into these new homes. And so the risk that you've now got is that builders have been lured into buying plots and building homes, and now they're coming to sell them, and people would love to buy them. You never have a housing market where people don't want to buy houses. That is never the problem. The question is whether they can get the mortgage to do it. I have a very good friend who relates all this to diamonds, and she says, there is no shortage of demand in my household for diamonds. There's just a shortage of the cash to buy them.
Hallelujah to that. Yeah, that's what I say, Paul. I can relate to that message.
Yeah.
So where does this leave the Fed? Because they're dealing with this complexity too, right?
Well, I think the Fed is a bit adrift at the moment. If you look at the three main central banks, Japanese, the Bank of Japan is just lost completely. No idea what it's doing. The yen has gone from 100 to the dollar 2 years ago to 150, a 50% change on the world's third largest economy. That tells you the markets have woken up to the fact these guys do not know what they're doing, but when they find out, it ain't going to be pretty. Europe, Christine Lagarde at the European Central Bank made a very interesting speech at Jackson Hole a couple of weeks ago, where she talked about the changes that are taking place and the fact that our models don't work anymore, and we're trying to look backwards to see what might be happening, but actually she quoted Kierkegaard and said we look backwards to find out where we've been, but we have to look forwards to find out where we're going. And I had to laugh when Jay Powell said, at the Fed, we're navigating by the stars, but the sky is rather cloudy. And I go, Jay, have you ever thought of getting a GPS system? Getting radar?
Yeah, there are other things that are possible. Real-time information, technology.
Yeah, can you imagine the CEO of a company saying, well, I'm navigating by the stars and it's a bit cloudy? I think the shareholders might find him in an astronomer's job.
Yeah, exactly. And there are some questions about why there is not more, about the, I don't want to say accuracy of the data, but whether there should be more real-time ways to sort of get a look at the forward leaning, as opposed to the data that comes in, we know it lags, and then it has these big revisions a year later, presumably.
Yeah.
It's not the struggle of just the Fed. Certainly others are dealing with this as well.
The whole nature of economics is that it's a series of guesses. Some of them are more educated than others, but in my neck of the woods in chemistry, the laws of chemistry are the laws of chemistry. You can't change them. That's the way it happens. But there are no laws in economics. Various people have opinions. And some shout louder than others, and their opinions tend to get more listened to because they shout louder, but it doesn't make them right.
Yeah, absolutely. And I think we're seeing that debate really play out right now. And we're going to be talking a lot. We've got a great content campaign coming up for all of you, and we're going to really be diving into these sort of, they're opposing views in many ways, but we're going to try to drill down a little bit and see what makes it different. What are people looking at that might be different, and how much is their time horizon involved in that? Speaking of time horizon, we're at the bottom of the half hour. So we're going to flip over to the platform. We appreciate everyone who joined us for the first half. If you want to stay with
Oh,
us, ask
yeah.
some questions of Paul. We're going to talk a little bit more about how Asia fits into this and some of the concerns that Paul has there. Scan the QR code, jump on a trial, and come join us.